Hey traders, Shane from GT Futures and FX. Welcome to our presentation, Becoming Profitable Using the Power of a Multi-System Strategy. And this is part two of our presentation. So we finished our last presentation looking at the opportunities that exist in the market when you have a potential multi-system strategy. So we're going to explore a little bit more of that today. We're also going to look at obviously the potential of a multi-system strategy. So we're going to have a look at some of the numbers and how a multi-system strategy can dramatically improve your trading performance. So let's get underway. So one thing we left you with last time, we said that you'd be surprised at what can be achieved through this process. And we also said that one system won't work all the time. So you need to improve our performance in the market by actually trading a multi-system strategy, because we know that the markets are doing one of two things. They're either trending or they're range bound. So our goal really today is to find the secret to putting the multi-system strategy together. And there is a secret to that approach. And we want to look at how do we take advantage of that. And obviously applying the multi-system strategy approach is the first step in that process. We're also trying to find out, is every day a trading day? And potentially if you've got a multi-system strategy, yes it is. So our goal today is to create a balanced portfolio. So we want to create a balanced portfolio to achieve the best results we possibly can. And the key to that is diversification. The key to balancing your portfolio, particularly if you're trading futures and forex, diversification. So what do we mean by diversification? So it doesn't necessarily mean that we need to focus in on the time horizon, whether it's an intraday chart or a swing trading chart. There's a number of ways we can achieve diversification. The first one is obviously trading multiple markets. Multiple markets will allow us to diversify our portfolio. But the other way we can do it is we could trade multiple systems on the same market. And then obviously we've got another tier of diversification where we trade multiple systems on multiple markets. So you can see there that there is a number of ways that we can achieve that diversification. And as I mentioned before, the time horizon that we choose doesn't really matter so much, but what we need to make sure is that when we look at our systems collectively, that we achieve diversification by ensuring that they are not correlated. So we're looking to basically put systems together that is making sure that our drawdown does not occur at the same time. Now, most traders, when they look at a multi-system strategy, this is what they think is really the opportunity, but the reality is that the opportunity is much bigger than that. It's just the tip of the iceberg. Once you start putting systems together, particularly a multi-system strategy approach, so you'll be surprised at what the potential is once you start putting these strategies together. So we need to look below the surface, obviously, of our systems. We need to really kind of put them together, because there are huge opportunities when applying a multi-system or multi-market approach. And we're going to explore that with our stats shortly. Now, obviously, we're going to be looking at trend, cycle, counter trend, momentum, pullback type strategies. We're not going to necessarily be focusing on our pattern systems, so systems that present a pattern over and over again, because they tend to be a little bit subjective. So we're going to kind of try to move away from that type of trading approach, and we're going to try and stick with the concept of just the basic trend, cycle, counter trend, momentum type systems. Once we start applying money management to our multi-system approach, we're really tapping into what we call geometric growth. Now, when you start looking at money management and scaling your positions up, whether it's either scaling in or pyramiding in on your strategy, or using some type of rate of increase for your system, then you start to really, gather the potential of geometric growth. And we're going to talk about that, because that can really propel your trading account to another level. And this is where we can maximize, obviously, the power of a multi-system strategy, because the multi-system strategy works on the concept that we're minimizing risk and increasing potential profit. And until you actually see that in play, I think you're going to be very surprised at what the potential of it is. So we're going to look at a couple of systems here, System 1 and System 2. Obviously, we have a number of systems loaded up in our portfolio. We're going to do a little bit of an experiment here. We're going to look at them independent of each other, and then we're going to combine the results. So traders, we're not going to have to choose between systems. We're actually going to combine our systems together, And I'm going to prove to you by combining the systems together that we have a far better edge than we have trading one system. So let's jump in and have a look at our stats and see how we can balance this portfolio and achieve much greater results using the power of a multi-system strategy. Okay, traders, what I've got in front of us here is the PME, which is our Portfolio Manager Elite spreadsheet. This is where our data from TradeStation comes, and this is the data on all our systems. So we've got a number of different strategies loaded up in our spreadsheet, and you can see that we've got in this column here AB, we have the cycle, trend, momentum. We've got a number of strategies, counter trend. What I'm going to show you at the moment is I'm going to take you through the power of a multi-system strategy. So let's just pick one system. So we're going to pick the system T17, which trades on our 30-year bonds, and it's a cyclical type strategy. And let's have a look at the stats on that strategy. So we know from that system that the max drawdown is 1743. So it's produced $19,705 worth of profit, so that's fantastic. Over 12 months, really good return. As I said, the max drawdown 1743. And average trade net profit is $59. Number of trades 334. So a good sample size, good number of trades. Net profit to max drawdown 11.31. So you can see that this system has done very well over the last 12 months. Now, remember, our goal with a multi-system strategy is to be trading multiple systems at one time. And the goal is to increase our net profit, so our overall profit. And it is also to make sure that we diversify our portfolio and minimize our risk. So that's really the ultimate goal. Our ultimate goal is to reduce our overall risk on our portfolio. Now, with one system, the trouble with trading with one system is that as soon as the bonds market starts to get volatile and we start to get good movement, then this cycle trader strategy, because it trades based on buying support, selling resistance, so it really works very well in rangey type markets, is not going to do as well. So we need to make sure that we've got a little bit of protection here, but if we add a second system in, we need to make sure that we're not doubling our risk. So if we do trade a second system, we need to make sure that it's actually reducing our overall risk on our portfolio. So let's add in a trending system like heating oil. So we've got the bonds market, and we'll add in a system that trades on the energies, which is heating oil. And let's do that now. So we'll turn that strategy on. Once we put a 1 in that column now is adding all the data from heating oil, which is one of our trending systems, to our portfolio. So we know that system made $16,000 last year. It's got a good number of trades, 295. Its max drawdown though, is 1931. So if these two systems were highly correlated, then we potentially would have a situation where we're adding 1931, so we're adding that drawdown to our current drawdown, which is 1743, and if they were highly correlated, we may have a max drawdown of, say, 3600. Now, obviously, we've looked at the stats here, and we're looking at the stats here now, and you can see that our profit has jumped up considerably to 36,000 because we're adding the profit from T17, which is the profit from 19,705, with our heating oil profit, which is 16,000, gives us a total profit of 36,000. Here's an interesting thing. We've almost doubled our account, but what have we done with our risk? By adding in a system that is uncorrelated, we've actually taken our drawdown from 1,700 down to 1,400. So we've reduced our overall risk on our strategy, on our portfolio. So this is the power of having a multi-system strategy. And this is what we're going to be talking about today. So really, when we're looking at systems and adding systems to our portfolio, we want systems that are going to reduce our drawdown and increase our overall net profit. So at the moment, we're trading two systems. We've increased our profit overall, and we've reduced obviously our max portfolio drawdown. Let's see if we can get another system in here that's going to help us do the same again. Alright traders, so at the moment we've got our drawdown down to 1424. We started with a drawdown of 1783. 1743, and now we're down to 1424. Now, can we improve our profit and not really take on any more risk? Let's see if we can do that. So what we're going to do now is we're going to add another cycle trading strategy, and so we'll add in CT50, which is our crude strategy, and we'll see what happens there. So remember, we've got $36,000 worth of profit, and let's add this strategy in. Now, if we add in crude, we know that the crude oil strategy has made a massive $21,000. So if this strategy goes in at $21,000 without really increasing our overall risk significantly, this would definitely be something that we would look at adding in. So let's add in the cycle trader, and it takes us up to $57,000 of overall profit. Our max drawdown really only increases by $400. So we've got a $400 increase on our max drawdown. It's less than $100 more than when we had just one strategy trading. So we basically had T17 trading with an overall profit. T17 was running an overall profit of $19,000, and now we've gone from a $19,000 profit with a $1,743 max risk to an $1,800 max risk, and we've got $57,000 worth of potential profit there. So traders, what we've effectively done is we've added 5.3% risk, because it's gone from $1,743 up to $1,836. So we've added 5% additional risk, and we've added 200% on our overall profit. So that is a massive improvement. So what you can see there is that by having a multi-system strategy, you can obviously multi-system, multi-market. We've effectively increased our portfolio by 200% and taking 5% more risk. Now, what would be awesome here would be, obviously we're trying to get that risk below 1836. So let's see if we can do that. All right, traders, we may just add in here SN201, the Euro bond. Now the Euro bond is not really, its max drawdown is $254. The overall profit is $2,763. So we'll get a little bit of profit on adding the strategy, but it may actually help us with our drawdown. Let's see what it does. So we'll add it in. 1836 is our max drawdown. Oh, down to 1584. So we've actually reduced our drawdown now below our original drawdown amount of 1743. So now we're down, and we've actually increased our overall profit to $60,000. So that really is the sweet spot. We've got 4 systems trading and managed to get a max drawdown of 1584, which is fantastic. So that's definitely something that we would want to look at as far as having as our portfolio. So 4 systems bring in an overall profit of $60,000. But what's interesting here is we want to see what the potential money management is like. Hey traders, we're going to have a look now at our portfolio tab. Now we had a look at the system management, what happens when we turn systems on and off. Now we're going to go through the money management, because this is where the real gold is. So remember when we spoke about diversification, part of that also includes the ability to manage risk and leverage up your resources, your profit potential using money management. So when we look at our money management, we have a structured portfolio money management tool that we use. We use what's called a fixed ratio method of money management. And what that allows us to do is it allows us to focus in on obviously our portfolio drawdown, but also capitalize on our geometric growth. So the growth at which we can get on our strategies when they're working harmoniously together to reduce drawdown. So you could see the potential we had when we started stacking systems. We were able to put systems together, 4 in total, and keep our risk down. So what we have now is we have the ability to start applying money management. And when we do that, we're going to see huge potential growth. So you can see this line down the bottom here, our pinkish orangey lines down the bottom here, that is our normal distribution of profit. So based on the 4 systems we're trading, lower drawdown, because remember we're utilizing our portfolio risk model, Now, with that, we're able to pull in just around about $59,000-$60,000. But when we start adding contracts and applying our money management with a delta of 1,000, and I'll explain in later videos what our delta concept is. So when we start applying a fixed ratio method of money management, we're able to leverage up our portfolio and really hit that geometric growth. And you can see the overall profit on those four systems, I should say, is just over $474,000. So that is a huge improvement on a standard portfolio. So with money management, obviously, as you start increasing your profit, you're going to apply additional strategies or additional systems, applying additional contracts, and this is with the application of 11 additional contracts spaced out over that period that we're trading. As we start increasing profit, we apply another contract, and we'll show you later on how we do that. But that is the potential of money management. So if you want to find out more about this money management model that we have, definitely tune in for our next video. I'm going to take you through in a little bit more detail how it works, how we can leverage up this portfolio to get such great returns. And we're really not taking any more risk. We're still staying within our portfolio mandate risk, and we're trying to keep that portfolio risk down as low as we can, but leverage up on our profit. So thank you for your time. Have a fantastic rest of the day. I look forward to catching you on the next video. Cheers.